Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. InsideRealEstateRadio.com is the website. InsideRealEstateRadio.com is the website. Hey, talk to us, 888-787-CLIFF, 888-787-CLIFF if you want to talk to us. Time to get into a little bit of mortgage talk. We got Terri right here, her website, TerriWaggoner.com, TerriWaggoner.com. Hey, Terri.
Hey, good morning.
Good morning.
Well, it's kind of funny that we're sitting here talking about, people that are sick and they need help, and we're here to wait for you to go through your personal experiences that you may be going through. Mm-hmm. Do you know what I brought today to talk about?
What?
A brand new loan, and it's called the doctor loan.
Wow. Okay.
Yeah, kind of cool. So those that help our customers, also the doctors, will help them.
Okay.
Okay. So it's kind of a cool little brand new loan program. It's kind of specialized, but I wanted to bring it to the attention of our listeners. It's called the Doctors Program. Yeah, obviously you have to be a doctor. Go figure.
Now, can you just be called a doctor?
No. You cannot be the doctor of real estate.
You can't be.
No,
the
can't be the doctor of
democracy.
insurance. No.
The doctor of insurance.
No.
How about Dr. Dre?
Yeah, I think so. I think he's a real doctor. Okay, but anyway, back to the loan.
Sorry.
That's okay. So this is an ARM loan. You can, and we haven't talked about ARMs in a long time because it hasn't really been necessary. But with rates going up on us a little bit, maybe it's time to kind of stick our toe back into the ARM pool, if you will.
Not an arm and a leg.
No, not an arm and a leg.
An arm.
Just the arm.
Okay.
Just the arm.
All
so
right.
we can do we're comedians this morning, aren't we?
Yes, we are.
Okay, so we can do either a 5 or a 7 year arm on this product.
Okay.
In order for you to be eligible for this product, you have to be a medical resident, medical doctor, doctor of dentistry, doctor of optometry. There's several other, if you are a doctor, most likely we can help you with this loan.
Okay.
And the big thing that helps out with this, because when you get out of medical school, you have tons of student loans.
Right.
And if we have to count those student loan payments in your debt ratio, and if you're just starting off as a doctor, you probably aren't going to qualify.
Right.
Because your debt ratio is going to be too high. So with this program, if your student loans are deferred for 12 months or greater from the time that we set up the loan, we don't have to count those in your debt ratio. Because the thinking is, as you progress in your career, you'll make more money.
Right.
And you'll be able to pay those student loans. So we can start you off on an ARM loan, lower interest rate, get you going, get you into your house. And then as your career progresses, you're still able to take care of the loan.
Okay.
Okay.
How are we establishing what they can qualify for on that loan?
You mean what percentage? What debt ratio?
Assuming they're locked in, to some sort of early residency or something of that nature.
Right. So they'll have to have a contract for employment.
Okay.
And most doctors do.
Yeah.
So they'll have to have the contract for employment, and any stipulations that go along with that contract will have to be met.
Okay.
You have to do this, or you have to graduate here, or, those stipulations have to be met before we can move forward with just using the contract.
Okay.
And we can go up to a 43% debt to income ratio. It does have to be your primary residency. We can't do an investment or a second home utilizing this loan.
Okay.
But it doesn't have to be your only property that you own. So you may already own an investment property and want to buy a primary residency, and we can utilize this loan.
Okay.
Okay. You can also we'll talk about the credit for a little bit. So you have to have fairly decent credit. I'm trying to find the minimum credit score. I want to say it's like a 720 is the minimum credit score. 720 if we're going up to a $650,000 loan limit. And you're putting just 3% down. We can do a 3% down because, again, if you're a first-time home buyer, you can utilize that aspect of it.
Okay.
Okay. If you're putting 5% down, we can have a credit score of 700. And going up to $850,000 as a purchase price, putting 10% down with the 720. Okay. So you have to have, pretty decent credit score.
Right.
We don't want any lates on your rental history, or if you had a mortgage, on your mortgage history in the last 12, and no more than one in the last 2 years.
Okay.
So if you're renting, we need to make sure that those are paid on time. Installment loans have to be paid on time. But for the for actually to kind of put it in perspective, if you have those things, your credit score is probably not going to be a 720 anyway.
Right.
But bankruptcies, foreclosures, short sales, those things, we have to wait 5 years from the date of your application. Just pretty much in line with a conventional loan to begin with. Mm-hmm. You have to have trade lines for us to rate. Okay, so we'll take a look at all of that. You can purchase a single family residency, a townhome, condo, all of the standard property types. At least one of the borrowers has to be a doctor. So it can be a husband and wife team, and only one of the parties be a doctor. Okay. The borrower can purchase a home if they have a pending employment contract. So they don't even have to have started the job yet. We can complete the loan as long as the contract has their employment date within 60 days of the loan closing.
Okay.
So we can set it out a little bit.
It's pretty flexible.
Yeah. So if you've got a contract for employment, maybe you're finishing up school, and you want to buy a house, we can still do that. You're smiling, Mike.
I am.
What are you laughing at?
I'm smiling because. So how do they have to prove that they have to prove they've gotten through school at least, or?
Well, some of them may still be in school and finishing up.
I am a doctor.
That's right.
A doctor of real estate.
We cannot do this loan for you, Mike.
Well, I have a friend. His name is Dr. Perma, and he is the doctor of all beverages.
You're a mess.
Can we get a house for him?
I think so.
Yeah.
Well, maybe not in this loan program, but I could certainly still do a loan for him.
So, look, folks, all right, if you're a doctor, thinking about being a doctor out there, going through school, this is a really great program because, generally speaking, in that profession, you are a renter, and you rent for quite a while because doctors have this idea that, okay, we're going to get rid of the debt, we're going to pay that off, and then we're going to buy the big house. That doctors sort of generally have this philosophy of they don't go to the starter house. You just don't see doctors getting a starter house.
Right.
Very rarely have I had that occur, and I don't know very often that I've heard of it, from other agents either. But doctors kind of just go to that next level. They go to that mid-level house, or the larger home. They don't kind of go to the starter home. So this is really a great option for doctors because it's leveraging the fact that, look, you are going to probably make good money, and we're going to say it's okay that you've got this massive amount of college debt,
right?
8 years of college debt.
And any other loan type is going to require you to count those student payments, even if they're in deferment for a year or more. You're still going to have to count the minimum payment in your debt ratio. Mm-hmm. So that's the big thing with this loan is we just don't have to count that in your debt ratio, therefore allowing you to qualify maybe for that mid-level house.
Yeah, and for anybody else, as a bank assessing risk, you look at a borrower and you say, okay, look, you've not been in the workforce. You're like 30 years old. You've pretty much never had a job in your life. You've really been a professional student up until this point, and you're 30, 32 years old. And you've got a gazillion dollars worth of debt. Not a great risk.
Right.
But, now with this program, we can say, hey, okay, doctor.
Right.
Or potential doctor. We're going to.
You like that word, don't you, Mike?
I'm just playing with it today. I don't know. We're going to take care of you. So, hey, for you guys out there in the medical industry, this is a great, great thing for you. And because you do, you rack up so much debt.
Right.
and you don't have an opportunity really to buy right away, right as you're getting into your field. And of course you guys work odd shifts and you spend a lot of time working anyway, but there's a great opportunity for you guys to take advantage of being able to get a starter home or even kind of that middle of the road home, even with, your debt and whatnot, and making it manageable for them. So
it is a great loan.
Great program.
Loan product.
It's good stuff.
Right.
Hey, folks, talk to Terri. She's the expert. TerriWaggoner.com. TerriWaggoner.com for all your needs. Terri's over at Supreme Lending. Folks, we're going to take a short break. See you on the other side.